As an investor or would be investor, it's necessary you understand the impact of upcoming elections and policies, you know, on your investments, the impact of upcoming elections and government policies and, on your investment portfolio. So in this case, we want to talk about this particular, topic under a number of subheadings. I want to start with number one. Here is analyze historical price trend. So how do you understand market impact? You do that by having a grasp of a proper grasp of historical market trends. So in this case, you review how past elections or similar political events have affected the markets. For instance, observe market movement during, election cycles or major, policy shifts. Like in my country here, during, during the campaign periods towards the election, it may dampen the market. And once the election is over and the candidate is sworn in, the market tends to like revive all of a sudden. So number two is a monitor candidate policy. You identify policies proposed by leading candidates such as does it include tax reform, regulatory changes, or spending plans? Consider how these policies might influence specific industries or the economy. For instance, in the country in Nigeria, there is this removal of fuel subsidy. In fact, it really touched the economy almost like negatively. Everything, prices of goods, kind of skyrocketed. You see, and so you tend to analyze how government policies will affect. You analyze how government policies will likely affect the economy and the stock market in particular. Number three is evaluate sectoral impact. Evaluate sectoral impact and assess which sectors are likely to benefit or face challenges based on proposed policies. For example, lower corporate taxes may boost profitability in most sectors. A government that comes in with an agenda of lowering taxes, corporate taxes, this particular factor, this agenda will then boost, would affect almost all the sectors in the economy and the stock market positively. So green energy, incentive may favor renewable energy companies. And not only that, healthcare reforms could create volatility in pharmaceutical or insurance stocks. So all these policies have, affects different sectors, differently. And you need to take that into consideration. Number four is then track key economic indicators. You need to track key economic indicators. So keep an eye on metrics like the GDP growth, inflation, and unemployment figures. Election often, often affect policies, tied to these indicators, which can influence market sentiments. So you try to analyze how elections and other political events could affect GDP growth, will affect investor sentiment, will affect even level of unemployment in the country, and see how you could react proactively to such events. Number five is assess geopolitical risk. Assess geopolitical risk. So consider the potential impact of new policy or new foreign policy directions on trade relations. You consider tariff or global supply chains, particularly in sectors like technology, agriculture, as well as manufacturing. So in this case, you need to have an assessment of geopolitical risk. How the impact of foreign policies direction on matters like trade relations, like tariff. There could be trade wars that could even affect tariffs. You need to take this particular concept into consideration. Please like this video and subscribe to this channel if you've not done that. Number six is monitor polls and forecasts. You monitor polls and forecasts. Analyze polling data and predictions from credible sources to gauge likely election outcomes. Market often prices in expectation, well before results are announced. Usually, the sentiments in the market, investor sentiment, will reflect in the market itself before the results comes out. So you need to pay attention to the polls. And number 7 is understand regulatory implication. Understand regulatory implications. Evaluate potential changes to regulatory frameworks such as antitrust laws, environmental rules, or financial oversight. Sectors like banking, energy, and tech are especially sensitive to these changes. They are kind of influenced by regulatory framework. And number 8 is factor in market sentiment and volatility. You need to factor in market sentiment, investor sentiment, and overall volatility in the markets. So evaluate election often heighten uncertainty, leading to increased volatility. Use tools like the volatility index to assess market expectations. Number 9 is study global reactions. Although investing could be localized, could be a domestic affairs, but you don't just shut your ears to what is happening, in the global arena. You need to pay attention to what is happening globally. So you examine how global markets and foreign investors react to election developments. This can, offer insight into international confidence in the domestic economy and its policies. You need to understand how other countries are reacting to what is happening in your own country when it comes to elections. And you need to react, proactively as the case may be. Number 10 is diversify and hedge. Diversify and hedge. Use diversification and hedging strategies, to mitigate potential risk associated with electoral uncertainty. Include safe haven assets like bonds or gold if the political climate seems particularly unstable. So you may include gold and bonds in your portfolio. These asset classes are known to be relatively stable compared to equities. Number 11 is stay updated on key dates. Stay updated on key dates. So follow election timeline and debate closely. Market responses often align with pivotal moments such as policy announcements, debates, or key endorsements. You need to be conversant with election candidates, the political candidates' views on certain events. Not only that, the key takeaway involve the need to assess the market impact of elections and political policies. It requires careful analysis and of historical trend. You carefully analyze historical trends, proposed policies, sectoral vulnerability, and investor sentiments. So a proactive, well-informed approach can help mitigate risk and identify potential opportunities during political, during politically charged periods. So when it comes to investing, you have to be conversant with politics, whether you like it or not. It's an intricate part of you being, and being a successful investor. Pay attention to politics. You may not really participate as a person, but you need to pay attention to the political environment around you and even government policies. You need to be conversant with them.